Hello everyone, welcome back to Stoxxies. Today I'm sharing something personal, my portfolio performance over the last 12 months. The headline number is plus 60%, but behind that number, there are stocks that dragged it down and stocks that absolutely exploded. Stay until the end, because the last stock I'm going to show you broke every record, and the numbers will blow your mind. Let's start with the tough ones. These are the stocks that hurt my portfolio. I'll go from the smallest loss to the biggest. It's worth watching them because some of them hide opportunities that may interest you. Microsoft is down around 12 to 14% over the last year. That seems surprising for a company doing $280 billion in revenue and dominating cloud and AI. But investors are worried about how much Microsoft is spending on AI infrastructure. The reality? Microsoft is one of the most fundamentally strong companies in the world. 56 analysts rate it a strong buy, with a target of $560. This is a temporary dip. Vistra is an energy company that was the best performing stock in the entire S&P 500 in 2024. Over the last 12 months, it's down about 25%. After a massive run, it pulled back. But the demand for energy from AI data centers is only growing. Vistra owns nuclear and gas plants and has long-term energy contracts with major tech companies. Analysts see it heading past $200. I'm holding. Adobe is down around 40% over the last year. The market fears that AI tools will replace Adobe's products. But Adobe has already built AI directly into Photoshop, Premiere, and all its creative tools. It has $24 billion in annual revenue and just announced a $25 billion share buyback. At current prices, Adobe trades at historically low valuation levels. The bounce will come. Novo Nordisk, the company behind Wegovy, is down nearly 40% over the last year. Eli Lilly took market share, and Novo cut its guidance for 2026. But global demand for weight loss medications is enormous. The Wegovy pill just passed 2 million prescriptions in a few months, and Novo is getting wider coverage from health systems like England's NHS. The stock now trades at a very low valuation for its industry. Recovery is a matter of when, not if. Nike is down close to 45% over the last year. Weak sales in China, slowing demand for older products, and 2 rounds of layoffs in 2026 have pressured the stock. But the new CEO, Elliott Hill, is doing a full brand reset, launching fresh products and cutting costs. Nike is still the world's largest athletic brand. At these historically low prices, many analysts see it as a long-term buy. Celsius is down about 50% over the last year, but that number is misleading. In Q1 2026, Celsius reported 138% revenue growth year over year, driven by its acquisitions of Alani Nu and Rockstar Energy. The combined portfolio now holds over 20% of the US energy drink market. The issue was margin pressure during integration. That will normalize. The stock is cheap relative to what the business actually is. Lululemon is my worst performer, down close to 55% over the last year. Declining US sales, a CEO transition, and reduced guidance for 2026 have crushed the stock. But Lululemon is still growing strongly in China and has a loyal premium customer base. The brand is intact. At these lows, the risk-reward is becoming interesting again. Now the good stuff. These are the stocks that delivered, from smallest gain to largest. Let's start with Marvell. Marvell is up around 170% over the last year. The company designs custom semiconductors for AI data centers. It just reported record quarterly revenue. NVIDIA's CEO Jensen Huang called Marvell the next trillion-dollar company. It's being added to the S&P 500. The story is far from over. Dell is up over 265% over the last year. Yes, Dell. The company known for laptops is now one of the biggest AI server suppliers on the planet. It received over $64 billion in AI server orders in fiscal 2026 alone. After its latest earnings report, the stock jumped 39% in one night. This is one of the biggest market surprises of the year. Rocket Lab is up close to 300% over the last year. The company builds small rockets and spacecraft systems. With excitement around the space economy and the anticipated SpaceX IPO, Rocket Lab has been in the spotlight. It's already launching regularly and building its next-generation larger rocket, Neutron. AMD is up over 300% over the last year. The company is the main competitor to NVIDIA in AI processors. Revenue grew 38% in Q1 2026 alone, and guidance for the next quarter was even stronger. 51 analysts rate AMD a strong buy. It could become a trillion-dollar company before the end of the year. Nebius is up nearly 500% over the last year. It's a full-stack AI infrastructure company spun out from Yandex. It started with $2.5 billion in capital and hundreds of top engineers. It signed a $19 billion deal with Microsoft, a $27 billion deal with Meta, and NVIDIA invested $2 billion directly into the company. Total contracted backlog is approaching $50 billion. Micron is up over 730% over the last year. 730%. Micron makes memory chips for AI data centers. As AI demand exploded and NAND supply stayed tight, Micron's stock followed. Its HBM memory products for AI chips are in critical shortage globally. Revenue is up massively. No one saw this coming at this speed. And now we get to the most extraordinary stock in my portfolio. The one that broke every record. The one that is the main reason my portfolio is up 60%. This is SanDisk. Over the last year, SanDisk stock is up over 3,500%. 3,500%. If you had put $1,000 into this stock a year ago, you would have over $35,000 today. Here's what happened. SanDisk was spun off from Western Digital in February 2026. It makes NAND storage chips for data centers. And then came the moment when AI data center demand for storage massively outpaced supply. In its most recent quarter, SanDisk reported revenue of nearly $6 billion, up 251% year-over-year. Its data center segment alone grew 645%. This is one of the greatest turnaround stories we have seen in the semiconductor industry in years. Analysts expect the NAND shortage to last through 2028. This is what a real portfolio looks like. Not every stock wins. Some lose even when the company is doing fine. But the lesson is this. Stay invested, stay diversified, and one extraordinary stock can change everything. If you found this useful, hit like and subscribe. More investing content, simple and practical, coming your way. See you in the next one.